Hi, and welcome to Category Management Knowledge Group's weekly Category Management Tip. CMKG provides category management training solutions that are driven from a foundation of accredited e-learning courses. I'm Sue Nicholls, the president and owner of Category Management Knowledge Group. I love everything about category management, and every week I share some of my learnings on category management related topics. Our topic for January is private label. Last week, my tip covered some basic data and analytics that relate to private label. This week's tip gives examples of analytics that can be associated with a brand health assessment on private label. In less than 5 minutes, I'm going to walk you through a quick category health review, including a focus on pricing, promotion, and product, and focus specifically on private label. Let's start with a category overview. In this example, we're looking at total category results on the top half of the page and private label on the bottom half of the page, based on retail measurement data from a third-party data supplier. Retailer X is up 2% in the category, ahead of the remaining market, but with private label sales lagging behind total category growth at -2%. Retailer X is highly developed in private label compared to total category, as indicated by the 32 market share in private label versus the 29.9 in the total category. When looking across the segments, Retailer X is highly developed in private label in segment 3 and less developed in segment 1. Of note, segment 1 is much larger in dollar sales than segment 3. Segment 1 is flat in private label, while it's up 4% for the total category, and segment 3 is down 9% in private label and down only 1% in total category. Of note, neither retailer nor the remaining market has any product offerings in segment 2 in private label. In net, private label is losing share within the category, driven by lagging results in segments 1 and 3 compared to the total category. Now we'll look at some pricing results. Setting retail pricing on private label brands versus manufacturer brands is a complex issue. Retailer X has already established that their 1 kilogram product lineup in this category competes directly with one other national brand competitor in the same size. They've completed a thorough 52-week price gap analysis to understand how they should be price positioning themselves versus their closest 1 kilogram national brand competitor. From their weekly pricing analysis, they've been able to identify the weeks where they were priced higher than the national brand and the impact that had on their sales and profit for private label, as well as total category. For example, on week number 4, they were priced $1.51 higher than the national brand equivalent. And this week ranked 49th out of 52 weeks in both dollar sales and profit for private label. On the same week, the national brand product had its 5th top-ranked week in dollars and 2nd in profit. And ultimately, this resulted in week 4 having the 11th highest dollar volume week and the 35th in profit for the total category. If you compare the results across these weeks, you can see that in every instance where the private label gap was high versus national brand ranked high in both dollar volume and profit weeks as indicated in blue. And private label ranked its worst weeks as indicated in red. But some weeks worked favorably for total category sales and profit, while others didn't. In an example like this, Retailer X may want to establish guardrails so that their private label is never priced above the national brand equivalent or only within a certain percentage. This could help to increase sales on aggressively priced weeks for national brand and increase profit as well. Next is promotional analysis. This category is a seasonal category, meaning that it sells more volume at some times of year than others. To understand seasonality and how it ties in with promotion, Retailer X has compared sales and profit splits on private label across the latest 4 quarters. For example, quarter 1 did 20% of the total year volume and profit, and 27% of promotions were run in this quarter. In theory, share of promotions should be similar to the percentage of sales and profit for each quarter. The biggest opportunity for Retailer X is to increase promotions in Q4, where they sell 27% of volume and only 18% of promotions are currently run. and then they could subsequently reduce the promotional support in Q1. Now it's time for an assortment analysis. Retailer X wants to understand where they have assortment opportunities for their private label brand. This view gives great top-line assortment perspective for both control label, segments, and subsegments within control label. I can see the number of SKUs by segment, the share of SKUs across each segment, and then a fair share calculation, which is the share of SKUs divided by the category share. The fair share index gives insight into the segments that may be over-skewed relative to the category share for each segment in private label. Subsegments 1, 2, and 3 are over-skewed relative to their share, as indicated by the blue FSIs, and 4, 5, and 6 and segment 3 are underskewed, as indicated by the red numbers below 100. So Retailer X has the opportunity to look into each segment at a SKU level to determine if there's opportunities for them in terms of innovation, distribution, and/or delisting. We've now gone through and reviewed some examples of areas where there may be opportunities for the retailer to make some changes to their private label across some key tactics. These same analytics can be applied for national brands as well in a total category health assessment. So that's it for this week's tip. Next week's session is going to cover some supplier perspective on private label. You can also visit and/or subscribe to my blog if you haven't already done so. If you're interested in category management training, please visit our website. We have topics that will help you to fill in some of the gaps if you didn't understand some of the examples that I showed you today. Finally, we're very active in LinkedIn, Facebook, and Twitter, so please connect with us. Thanks, and we'll see you next week.